watching Investors Guide on ET now. Thanks for staying with us. Dhirendra is with us as well, and Avanne is here to give us a quick introduction into the IDFC Premier Equity Plan A. That's the fund that we're going to review. Avanne.
In its entire period of existence, the fund has outpaced its benchmark, the BSE 500, during the bull phases of the market and contained downside during market corrections. During the 2008 meltdown, the fund quickly moved 1/4 of its assets into debt, thus checking the falls. This fund invests in small and medium-sized businesses with good long-term potential, which are available at cheap valuations. There's no arguing with the numbers. The fund has given its investors an annualized return of 24% since its launch in 2005. FMCG, services and chemicals are the top 3 sectors. The fund has been overweight on consumer non-durables as well as transportation. On an average, 60% of the portfolio is in mid-caps and 30% in small caps. The fund holds a few offbeat stocks such as Page Industries, Solvent and Gokul Refoils and Solvent. Let's have a peek at the numbers turned out by the fund over the years. If you invested 1,000 rupees in this fund when it launched, you would have 3,269 rupees today. But is this a fund to indulge in? Our experts are here with some valuable inputs on the same.
Thanks, Avanne. So today, the IDFC Premier Equity Plan A, this is a fund that we've included in a couple of our portfolios as well. We know that it has beaten its benchmark regularly. It's contained the downside. It's done well during the upside. So obviously, this is one of the funds that all mutual fund investors should think very strongly about.
Yes, and but it comes with its own share of risk. I would say that investors should not get excited about this fund. It is a fund which will come with its own turbulence. There could be a phase when this fund will not succeed, because this is a fund which is trying to capitalize on a couple of themes, and they are not necessarily sector themes. And many a times this fund has taken a stand which is contrary to the market stand or even other fund managers. If you look at its current sector bets, it shows that. So I would say this fund on occasion will go wrong, and that is why it has done well. It's a very difficult strategy to succeed with time and again. So one should be conscious of that.
For someone who's investing in the IDFC Premier Equity Plan A, how should I approach this fund? Is it something like we talked about in the previous segment? Can I just put my money into an SIP into this fund and not worry about it? Is it something that I should check on a regular basis? As an investor, how do I decide whether or not I want to get into this fund?
No, get into this fund. Beware of the turbulence that this fund will have. Don't lose your patience in a brief period of time, say 9 months, 1 year. And keep an eye on the fund manager. If he leaves, get alerted and be ready to walk away, because it is a strategy which is heavily dependent on an individual. It is not as much process driven. So these are 2-3 things which one should have in mind. Be ready for a steep decline. Don't give up in a brief period. Invest regularly, and be ready to walk away if the fund manager goes.
This is very important. Be ready to walk away if the fund manager changes, because so much in this fund is dependent on the fund manager and his style of fund management. Remember, Dhirendra did say this fund likes to take a risk or two, so that's something you should be aware of as well if you're investing in this fund. Finally, to give us your verdict, a star rating on the IDFC Premier Equity Plan A, should we be investing in it?
Yeah, sure. It continues to be, I would give it a 5 stars for now.
Right, 5 stars there coming in for the IDFC Premier Equity Plan A on Investors Guide. But remember, you have to keep a close eye on that fund and its fund manager if you decide to invest in that fund. But then we have one last question that's come in for you. Dhirendra Prasad has written in. He tells us he buys 1 gram of gold in an ETF every month. And he wants to know if investing in gold ETFs is better than investing in SIP in a gold mutual fund, the open-ended gold mutual funds that have been launched lately. He wants to know what it would cost him and what the tax structure would be if he's investing in a gold ETF. He also has a question about silver. We're going to come to that. He wants to know if there's a demat form in which he can buy silver. But first of all, gold ETFs versus investing in an open-ended gold fund. We know that an open-ended gold fund doesn't require a demat account, but from your opinion, which one makes more sense?
Now the decision to choose between a gold ETF vis-a-vis a gold fund is entirely a function of his approach. If he's thinking that he's accumulating this gold and at some point in future he needs to convert that gold investment into real gold for his own consumption, for accumulating it for his daughter or whatever. That is one way of looking at it. If that is the goal, he should continue buying his 1 gram of gold every month through gold ETF at Share Fund. If he is taking a punt on gold, and if he thinks that gold is going up and that he must ride it, then ride it hard. Gold fund could be a good vehicle, but when riding gold as an opportunistic investment or as a speculative investment which you are unable to resist, work on a predefined formula that what is the level of loss when you will walk away. You will not let all your capital go down the drain, because that is something which can't be ruled out, and it will happen when you least expect it. And in the absence of such a disciplined or a documented or something which you can remind yourself of all the time, it's very dangerous to get in gold.
And of course, his next question on silver, where he says he's been investing in silver coins, but that involves paying tax and wastage charges. He wants to know, is there any way that he can buy silver in a demat form? Obviously, other than derivatives, there's no way, but would you recommend that he buy silver at all?
No, there is no such avenue. And all he can do is speculate in silver through derivatives. And that is not a very desirable way of, for investors, for naive investors who get started and trying to ride this with a low transaction cost. So I would say that, give it a pass. If you are unable to resist it, buy some coins, hold it, have fun.
So this is important advice to keep in mind. Investing in silver right now will be speculative, so you should be prepared to take a little bit of loss if that happens. Dhirendra, Kumar, thank you so much for that advice, and thank you for joining us on the show and answering our questions. We look forward to sitting down with you again next week. Remember, if you have questions for Dhirendra, you can write into us. There's an email ID at the bottom of your screen, and you can reach us on facebook.com/investorsguide. All of the answers you heard on the show will be on that page as well, in case you missed something and you want to take it down. We're going to slip into a quick break. On the other side, we're answering more questions on insurance and your investments, so don't go anywhere.